How to best trade forex without indicators. Trading forex without indicators is a strategy often referred to as price action trading. It involves analyzing the movement and behavior of price on a chart without relying on technical indicators. Here are some tips on how to trade forex without indicators effectively. 1. Understand price action. Learn to read and interpret price movements, patterns, and candlestick formations on charts. This includes recognizing support and resistance levels, trend lines, chart patterns like triangles or flags, and candlestick patterns like pin bars or engulfing patterns. 2. Use support and resistance. Identify key support and resistance levels where price tends to react or reverse. These levels can act as entry and exit points for trades. Price often respects these levels, offering opportunities for traders. 3. Follow trends. Although you're not using indicators, you can still identify trends by observing price movements. Trends show the general direction of the market, and trading in the direction of the trend can increase your chances of success. 4. Utilize candlestick patterns. Study candlestick patterns to understand market sentiment and potential reversals or continuations. Patterns like doji, hammer, shooting star, etc., can provide insights into possible shifts in price direction. 5. Practice risk management. Set stop-loss orders to limit potential losses and implement proper risk management strategies. Risk only a small percentage of your trading capital on each trade to preserve your account in case of losses. 6. Backtest and practice. Before trading practice your strategy on historical data to see how it performs. This helps in understanding the strategy's strengths and weaknesses. 7. Keep it simple. Avoid overcomplicating your analysis. Stick to the basics of price action and avoid unnecessary distractions. Simplicity often leads to clarity in trading decisions. 8. Develop a trading plan. Have a clear trading plan that outlines your entry and exit criteria, risk management strategy, and overall approach. Adhere to your plan and avoid impulsive decisions. 9. Stay informed. Keep track of economic news and events that could impact the forex market. Fundamental analysis can complement your price action analysis and provide a broader view of market conditions. 10. Be patient and disciplined. Patience is key in forex trading. Wait for high probability setups based on your analysis and don't force trades. Stick to your trading plan and maintain discipline. Remember, trading without indicators requires practice, patience, and discipline. It might not be suitable for everyone, so it's crucial to find a trading approach that aligns with your risk tolerance and trading style. Additionally, consider starting with a demo account to practice your strategy before trading with real money. For more details, watch my other videos, subscribe, ask a question in the comments, or contact me via email. See you soon.